Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade for April 12th, 2022. We are recording this at 4 p.m. Eastern Time, and this is episode number 192. So my name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing your trade ideas. I have invited Michael Filighera back to be our guest for today, and you should see his screen right now. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thanks a lot, David, and welcome everybody to the broadcast. We are going to go over your trades. We got 10 of them here. And then, of course, we're going to try to get into some things that we're seeing as well, using maybe some of the Elliott wave and technical analysis using Fibonacci numbers. Excuse me. So before we get started, Michael, introduce yourself if you would, and what's going on up at Logical Signals.
Sure. Hi, everybody. I am Michael Filighera, and I am with Logical Signals, but more importantly, I'm more involved with Traders Helping Traders right now, and my YouTube channels, which are both listed under Traders Helping Traders, and then my name, by the way. And so what's going on is that I'm continuing to just follow the markets and doing some long-term updates in terms of updating the long-term picture for the S&P, for the NASDAQ, for gold and silver, and also for interest rates, since at the moment, they're all very uniquely tied together.
Mm-hmm.
So,
okay, well, we're going to get into all that. And before we get started, do you want to, you have the S&P on your screen there, don't you?
I sure do.
So do you want to discuss what you're seeing?
Sure. Let me just kind of put this over because I'm going to put in, well, starting from my biggest picture, because that's really what's going to be important right now. That back when the market, so this would have been in January of this year, we hit an all-time high here in the ES, so in the S&P future, at 4808.25. And what that completed is, let me do one thing first. Let me take this out. I'm going to go to my monthly maximum chart. So this chart goes all the way back to 1983, so we can get this larger picture. So, because it's important to kind of see where we came from and what's going on. So in terms of the big picture, what we completed up here at 4808 is a cycle fifth wave. And here you can see, here was the top of cycle 3, which was in 2000. And then we had the bottom of cycle 4, which was 2009. So what really took place in there is this was just a recession. This was when the Dow went up and made a new all-time high all by itself. And then we dropped off a cliff in the financial collapse of 2008, 2009, included real estate, included everything. Everything kind of dropped. So from that point is where we began the last leg of this cycle degree advance. And so we've gone all the way up, and I'm going to bring it back down to the weekly chart so you can see here is the pandemic low, and that just completed a primary fourth wave. So we still had this huge primary fifth wave to do, and that is why we got that liftoff. So once this count was in, you just went along with that liftoff because I knew that it was going to be a primary fifth wave and there was going to be no turning back, at least not for quite some time. So here we are, we come all the way back up. We sit through a little downturn there. I think that was the China trade war. And another little downturn here, which was, I don't really remember, but it was some other thing that happened to us. So each one has not been the end of the road, but then we got up to here. And when you're using Elliott, you have to be able to count 5 waves of each degree and their building blocks, et cetera, et cetera. So this is the level that I put the completion point for intermediate wave 5, which is in yellow, primary 5, which is in the green, and cycle wave 5, which is in that brick red. And one more above that, it's a super cycle wave 3. That's where it completed. So what we have begun is a super cycle degree fourth wave correction. And what it's going to consist of, so we just start working our way backwards down the ladder, so to speak. So it's got to have 3 waves of cycle degree, an A wave, a B wave, and a C wave. And then if I'm looking at the cycle degree, that we're in this cycle degree wave A, it's either going to come as 3 waves or 5 waves, but they're going to be a primary degree and then one more down, intermediate degree. So now I'm going to go back to that daily chart. So basically what my point here is, we are just beginning. We're just beginning a long-term corrective phase, and it's going to be between 10 and 12 years is what I think it'll take before it all rolls out. Now, don't be misunderstood here, or don't let me be misunderstood here, that there will be more trading opportunities than we have seen in forever, because we'll have tons of premium, because volatility will increase going in both directions. We will have upswings, we will have downswings, we'll be all over, but eventually just continually working our way lower. So I try to help people not to interpret this as a negative, because there will be more trading opportunities than we can shake a stick at. Some are going to be on the long side, some are going to be on the short side, some are going to be using options, some are going to be using futures, some are going to be with individual stocks. And individual stocks will continue to follow their own path, but it will tend to go into agreement with what's happening in the component indexes that they belong to. So back to the S&P. So all-time high, I believe that's in place for quite a while. So I'm looking to get confirmation of it by getting on my daily chart 5 waves down, and I did. First we got wave 1, 2, 3, 4, 5. And this actually, the low is here, not here, and I had to do that on a closing basis. But safe to say, the low is actually here, and that's where intermediate wave 1 happened. Then we got this absolute kick butt rally against inflation, against many things that told you don't buy the market. And it happened anyway. So, but when you learn Elliott wave, you're going to learn that corrective waves, particularly a wave 2, is a wonder to behold in and of itself, because it can basically almost retrace all of the first wave. So it got up pretty high, and it was a straight shot up. But, and at one point I thought it was just the beginning, and I thought this would be a smaller decline followed by an additional move up. That's been taken off the plate right now because of the degree that we're falling. So this is the intermediate wave 2. What then tells us we're in an intermediate third wave down. And what's going to be inside that third wave are 5 waves of minor degree, of which I have 1 and 2 complete. Now I'm going to take this down again so that I can show on my hourly chart in more detail about what we're doing. So here we are coming off in the beginning of an intermediate third wave. Now, under Elliott guidelines, you learn that a third wave, not only is it a wonder to behold, but it is often, most often, the longest and the strongest out of the impulse sequence, which would be waves 1, 3, and 5. Those are the impulse. So we have a 5-wave sequence, but wave 2 corrects wave 1, wave 4 corrects wave 3. So out of the impulse part of that, you have 1, 3, and 5. So we're inside an intermediate third wave. Pull this down just a little bit. That started here. Then we get minor wave 1 and 2. Then it starts to break down. Inside the minor third, it starts to break down. So then we have minute wave 1 and 2. And then it starts to go again. And suddenly we get down to this low, and we do this today. And again, as Jim already said, here we are racing up this morning on basically bad news, basically to confirming that inflation remains a big problem. And on the consumer level, it's ticked up another 0.5%. how could that possibly be considered bullish? That's what I was thinking. But then I took a look, if you can just remove any emotional feelings about it, and I looked at it on a technical basis, then I kind of came up with, it's like, well, it's continuing to subdivide. So I go down another degree, we get another wave 1 and another wave 2. And how that really came to play is that if indeed that's what it was, what we saw, it's like falling off the cliff. We raced up, but when they started to sell, they sold and they sold and they sold and they sold, and they took it to a new low below where it all started. That is where I put in 1, 2, and now we're basically just beginning. And this is going to, you have to follow along, because remember, this is a start of an intermediate third wave, and then within it we have 5 waves of minor degrees. So we're in the minor wave 3, and then we have another 1, 2. So we're in the minute wave 3, and then we got another 1, 2. So we're in the minute or subminute wave 3. So we're in wave 3 of 3 of 3 of 3. So what I talk about when I'm trying to explain this to people, don't get hung up on the numbers. Get hung up on, this is going to be a strong and relentless decline. And the fact that we already moved to new lows over what we saw the other day, yesterday, is very important information in how this is going to continue. Now, I can put in, let's see, I'm going to have to start, I'll start here. Nope, got to put my drawings on. So we're going to start putting some Fibonacci, because Fibonacci is going to allow us to kind of take a look and to see where all of this is really headed. So there are Fibonacci relationships between these waves. So what I've just put on is where we now are looking for minute wave 3 to end up. And I can put one more on to actually show, and I'm going to open this up if I can. Come on, please don't. Yeah, there you go. So now I can get in here and put this on, and we can put one more. But let's just deal with minute wave 3. Now, again, remember, wave 3, the longest and the strongest. So we already have, so we compare wave 3 is going to be compared to wave 1. So minute wave 1 is right here. So minute wave 3 would be equal to minute wave 1 at 43.8025. Well, guess what? We kind of sailed through that. But here's this thing to remember. It's the longest and the strongest wave. So I'm already anticipating and expecting it to be longer than this. So the relationship between wave 3 and wave 1 comes that wave 3 will often be 1.618 times the length of wave 1. And now we're looking at 42.94. And that's where I'm going to expect this minute wave 3. If I go back up and I'm running a much larger, let me see if I can get this on my chart. Yeah, I can. Let me go back over to my daily, because I don't need to go out that far. I'm going to come down. I'm going to put another one on, which is going to show the intermediate third wave, because that's the major one. Now I do connect it to this, throw over low, which is 41.01. And there's a specific reason, but I just want to get this all up there to put it in. And that high that we had for intermediate wave 2 is 46.31. Okay, so now I'm going to go back down to my hourly chart. Now you can see here are, on the inside, are the Fibonacci retracement levels for intermediate wave 3. Now it has the same deal as the smaller wave 3s, and that it is related to intermediate wave 1. So here is where intermediate wave 3 would be equal in length to intermediate wave 1, 39.24. So now you can see how I build my big picture. What we're really looking at going forward. But I suspect that wave 3, again, longest and the strongest, it also will come in closer to 1.618 times the length of that first wave. And that, my friends, is down at 34.88. Now that's where I expect wave 3 to complete. Overall, I'm looking for this first wave down, this first larger wave down, which will be labeled wave A. I am looking for that to come in down here. Okay, so again, I'm not attempting to present a negative picture. This is a technical picture. There will be so many opportunities to trade in both directions, in individual stocks, in the indexes, whatever your instrument of choice is. There'll be many, many trading opportunities to make very solid, good money. Don't start to interpret that, oh my God, it's negative. It may be, but we have to remember the cause of this is what's negative. The move itself is just in a response to that we're needing to confront higher inflation. We're needing to confront that interest rates can't stay at the levels they're at. We need to confront that the Fed saying, well, we'll raise 7 times this year, quarter point each, which equals what? 1 3/4 points? Take a look at the bond market. See if that's agreeing with that. The bond market, even on the 2-year, the 5-year, and the 10-year note, are registering 2 3/4 or higher. So when you put that all together, it's not that the market, what they're doing is negative. It's what it's reacting to. So the negativity is in that we can no longer live in a low level interest rate environment. So cheap money, thing of the past. So preparing oneself is kind of start at the top of the food chain, which is interest rates. That's the top of the pecking order. Interest rates, the dollar, equities, bonds, that all falls underneath. And they all have to react what happens up at the top. And that's interest rates. When we do have that cheap money, which we've had for many, many years, anybody who listens to Jim, you've known it. It's like that cheap money is going to propel that market higher. And it did. And so now we've got the opposite. Why is it hitting tech harder? Because they had the biggest benefit out of the cheap money. They got to buy back all their stock. And so that pushes the prices even higher. So et cetera, et cetera. So it's cause and effect, kind of. So if they're not getting the cheap money, then they're not going to have that ability to do it. Prices should slide lower. So you can interpret it as negative because you've been long and now, should I get short or whatever? But there are many things you can do. In any case, coming back to here, I'm looking for that. Now, one more time, I'm going to go out to that monthly max. Ultimately, folks, when this is all over, again, 10 to 12 years, I'm looking for it to finish up at the low of 2009. So really, what we're doing is we're correcting the last huge move up that took place over the last 12 years. Unfortunately, it's going to take us as long to get down to that low. But because of the degree of where we're coming from on a super cycle level, that's a very large move. Super cycle wave 3, I'd have to go out to the SPX chart to show you, really started in 1942. So again, I'm not trying to project negative out here. I'm just presenting a technical and real picture. How we want to use that information, how we then revert that into forming our own trades and then trading them. That's what's going to be more important. We don't have to lose money. You don't have to sit with a long position. You don't have to assume that it's negative. This all rests in our hands, folks. So we can trade we can make decisions. You can sell something short. You can buy puts. You can sell calls. You can put positions together. You can use high risk positions. You can use defined risk positions. And please contact Jim, because he is a master at those types of positions. He will help you. So anyway.
All right. Well, that's pretty much it. Again, like I say, hedging tactics like collars and even covered call writing to reduce your cost basis have been excellent. But again, you have to know how it works, and you have to make sure it's appropriate for you, and there's tax consequences and all the 9 yards. But right now, basically you're saying is that, we had a nice peak in 4,800. We had the nice drop to 4,100. We've had a rebound rally to 4,631. That rebound rally is now over. And now we are looking at trying to find some support as we go down and down and down. You think there could be some support around 4,300, 4,294 if it goes and busts further, which is only 100 points away. And then it might give us some stability there. But on a percentage basis, what's the likelihood we're going to, in other words, a lot of people are saying the lows are in for the year.
No.
And my feeling is that we may take out those lows and go down towards 3,800 or something like that.
Absolutely correct.
What are you thinking there? Because
I actually see it exactly what you just said.
Yeah,
makes total sense. 4101 is not the low of the year.
Yeah,
and I tell you what frustrates me the most is when we hear from other analysts is like, oh, you got to be in this market. Oh, the market's extremely oversold. Okay, why is it oversold?
Well, hey, listen, I don't think you have to be from Harvard. We've gone from an accommodative situation with a tremendous amount of liquidity, and now we're taking liquidity out. And never have we seen liquidity being withdrawn from the system and prices go through the roof. So the bottom line is the withdrawal of liquidity is the reason behind it. And again, the purpose and the goal is to obviously get prices down, moderate growth, moderate prices. That generally will mean some lower real estate, some lower stocks, some lower, maybe even commodities.
Everything that's affected.
Everything's
affected. You're correct.
Yeah.
And
but like I say, there's a lot of things you can do. Obviously that's why God created the short-term T-bills, which are now paying quite a bit of money. And that's why, again, hedging strategies can be very important to know about, but you've got to know about them before it's like an insurance of any type. You can't be buying your insurance after the flood already hits.
Right. And just to piggyback on what you just said, during this entire process of called correction, there will be times when we will want to shift and go back into bonds. We'll want to shift.
Well, I mean, short-term treasuries are between 0 and 24 months are paying a reasonable yield, and at least you get your money back and you get some kind of return. And the bottom line is if you're in stocks that are dropping 20, 30, 40%, getting a couple percent return looks a lot better than that.
Right. That's what I mean. I mean, there are times
if you're over a certain age, you really can't be, losing all your life savings, hoping that Zoom comes back up or something like that.
Agreed.
But the point being is like I say, what we know is kind of like that the world has changed from a liquidity standpoint. The balance sheet ran up to 9 trillion because they printed a tremendous amount into the money supply. They're trying to take that out.
Right.
And then the tremendously low interest that has been there, is changing. But reality is the rates are still very low. And so again, if the Fed is going to think that they're going to get this thing under control with these low rates, that's what runs the risk that rates may have to go substantially higher than even we're seeing now. Yes, they obviously rates are way higher than the Fed. There's no question about that. The point being is that will the Fed try to catch up fairly quickly? And the answer is probably. And then after they catch up, are we still out there spending? Are we still out there borrowing and making real estate continue to go up? Because every time you see real estate go up and you see the stocks go up, it might just be a precursor to how much further interest rates may have to go.
Amen. Yeah.
Because their goal is to bring that down. Their goal was to bring in the unemployment down. So they took it from 10 or 15% all the way down to 3.
Right.
They obviously achieved their goal. Now they want to slow things down and bring prices more moderating. They tend to win. So, you know,
Right.
that's why they say don't fight the Fed, because they obviously don't, they tend to win.
And we hope that the Fed is going to be more aggressive and realizing. Unfortunately, I'm old enough to have been in the market and trading in 1980 and 1981. And we can do some comparison to that because cheap money was starting to get out of hand and inflation was running rampant. And it was affecting everything. And the Fed wasn't really willing to do anything. Put out a call. Here comes Paul Volcker, which everybody thought he was a demon because he took interest rates.
But I mean, like I say, they don't have the stamina or the fortitude to even do anything like that. But as far as
I don't disagree with you, but
at the end of the day, people who come to the meeting probably want to have an idea of where they could have put money. And if in my newsletter that I've been handing out weekly, I've been telling people since January that it's the staples and it's the utilities and the dividend paying stocks, and go look at the results of those three sectors and then compare them to the rest of the market. And you'll see that's where you have been in a situation where you either made some money or didn't lose that much. And then on the short-term treasuries, obviously you have very short duration. So it's going to be coming due, and then you can reinvest it at the higher rate. So the shorter duration on treasuries within a year has been a good place to park your cash, and being into staples, utilities, and dividend payers has been a good place to have your stocks, and everything else is a conversation.
Well stated. Yeah.
All right, let's start burning through some of these stocks. Newmont Mining was something that I was bullish on at $54 when it was paying 4% dividend. So to talk about it now is like talking about something that's already down the road quite a bit. But let's take a look at it and see what you think.
I'm going to go to the weekly because this has made such. In fact, I think I was on a show with you when you were talking about it at $54. And
well, I mean, I like 4% dividends. 4% dividend. That means you're getting a dividend while you're owning something. So your principal's gone from 54 to 82, and you got 4% each year while you're holding it. I mean, that's not a bad story.
No.
But here it's a different animal, because obviously it's on its all-time high, not quite the deal. And then the dividend, of course, because you divide it into the higher price, is not 4% anymore. So it's a whole different ball game. And again, it's really going to come down to, will the Fed taking liquidity out of the system at a pace ultimately make it difficult for the gold to sustain its value? And if it does, then this stuff can't last. If they are very slow and too slow, then this stuff could go parabolic. That's pretty much gold, isn't it?
It is. I actually, now I'm agreeing with you. It's like, here we are sitting at all-time highs for Newmont Mining. And that's not a bad thing. So the real question does become, will it continue? I would think that a lot of this is a short squeeze. I don't know what the ratio was, but I would think there's just a lot of short covering. Because I don't know if I'd want to step in and buy it right now. And if it's something that you want to hold on to because of the dividend, because of your own personal feelings, I personally might want to put some puts underneath so that you can hold on to it, but at least you're not going to get trashed if they start bringing the stock off, because you've got puts that will, of course, pick up that deficit for you. Personally, though, in gold, I think that there's a situation going on in gold that we can talk about if you want to when we get to it. But I think that gold has a lot of potential. If I had to put it on a probability scale at this stage, I can't give it more than 50. I can't give it less than 50. For a complete and utter strong short squeeze taking place in gold and silver. And if that happens, we could see gold zip to 3,000, 4,000.
I mean, obviously the gold stocks have already given you a fantastic return, because gold's not up 50%. But this stock has gone from 50 to 80, which is more than 50%. And so the
Do you
gold
happen-
shares are indicating that there's a
Right.
big thing going. And the RSIs are above 60. When the RSIs are above 60, sometimes you do get a very big spike in that direction.
Yeah,
So there's definitely, obviously you wouldn't short it up here just because it's on its all-time high.
right.
But it's probably going to be, again, the gold is kind of like, it just pulled back towards 1900 or close to it. Now it's right back up here in 1975
Right.
on the cash prices. And so, like you say, it has an ability to possibly go parabolic here,
Mhm.
unless and if, the word gets out that the dollar index is at 100, which means the dollar is extremely strong. The Federal Reserve's on a campaign to slow down growth and slow down inflation and slow down everything. And that, I don't think gold would be immune to that if people started to
No.
think they were
But
going to be successful.
What probability would you give that?
Right now, to be honest with you, right now, I think it's 50-50 with a lean to the upside, simply because the RSI is above 60. The market on this particular stock, has been rising, and the gold moving averages, a lot of them that I work with, are under the price and rising.
Right.
But so
Right. It's the same. It's like, I can't give it more than 50. I can't give it less than 50. So there
Yeah.
it sits right in the middle. No, I agree with
Yeah.
you.
And the
agree
thing
with
is like I say, I think you could, like on this particular one, when it gets up like this, sometimes you use the shorter term charts, like on a monthly. The averages that I look at would indicate you'd want to keep this thing above 82 and 80 on a real short leash.
Right.
And
Let me see if I can
I
get-
wouldn't want this thing trading under 80 right now if I was,
get into
wanting
the
to keep it on a short
daily.
leash.
This actually was the bottom of a fourth wave.
Hmm.
So this is the fifth wave. And so you have to be able to count. And I'm on the daily chart, which is a big enough size.
Yeah.
It's 1, 2, and then you got another. It's just going to come up. This is the 3 and a very well subdivided 3 and the 4. 1, 2, 1. I think it still has more upside, to be honest with you. But
Well, again,
much-
it also is the leader in the gold shares. So anybody in the planet who wants to diversify part of their portfolio into gold
they go to Newmont.
stocks, they're going to be using Newmont mining.
Yeah.
And so obviously you're getting a tremendous amount of cash going into a stock, and there might not be that much stock being sold. And so therefore, if you have a lot of people who want to buy and there's not many sellers, the guy who is going to sell is going to raise the offer. And that's basically what's happened with this thing.
Yeah, they've been pretty consistent with the dividend, and they've been pretty consistent with earnings.
Oh,
So
yeah.
I think earnings coming up.
It's the Cadillac of gold stocks.
Yeah, I'm sure.
Yeah.
But I think the earnings coming up may tell more of the story of what folks need to do. Again,
Well, and how the stock reacts to the earnings. So if the earnings come out gangbusters and the stock goes down, that might be telling you that
that's it. We've reached it. Yeah. Yeah, I agree.
Yeah, so this is a hard one to work with because you're getting in at the all-time high if you just start buying.
I wouldn't.
And there's an old adage, there's more money being made off the new high list than the new low list, and there's some truth to that. But in this particular case, it has had a very substantial run. And so my personal opinion is when you get into something this late, you have to use shorter term averages to keep it on a short leash, because if it comes down and just does a normal correction to the yellow line, that's going to be about a $10 drop in the stock. And if it
Right.
ever goes back down to pink, you're going to be talking about a $20 drop in the stock. And that's quite a bit. So this is a time to keep it on a short leash, I think.
Yeah, the yellow line you referred to, that's the 50 period moving average.
Yeah, so it's pretty extended.
Yeah.
And that's what makes
the other
that
one's
would
the
make you
200.
that would make you nervous about getting in on this kind of thing. And that's why some of the like GDX was way up at 40 and change and went home to 39 and change. So some of these gold things in the morning had their big heyday, and then they kind of went home with the tail between their leg a little bit.
Okay. What's
All right,
next?
let's go to QGEN.
QGEN.
Which is the lovely QGEN.
Yeah, there you go.
QGEN.
QGEN.
Anything with GEN, I'm assuming it has something to do with medical, healthcare, whatever.
But
biotech, maybe.
NV tells me that it's a Dutch company.
Yeah.
Okay. Really, somebody wanted this one, huh? totally unfamiliar with it. I don't like,
Doesn't look very good.
yeah, I do not like island highs, so we say. Even though it's a big island, but it's still a gap up and then die. And then just follow through. Let me go up one more and see what we got on the weekly.
It's a German provider of sample and assay technologies for molecular diagnostics, applied testing, and pharmaceutical research. You put that GEN at the end, you know you're talking pharma, right?
Yeah. I had to take that from this low. You get a 1 and a 2 and a very nasty 2, but that's okay. That is what happens. Then you have a 3 and a 4, and this is a 5. But then it comes down and it goes back up and it tests that level. On a closing basis, it did not move to a new high. If we had to go closing, then you come back down to here. This is the, you know, the
Yeah.
extreme. So, but it didn't create a new high. So I could say that this is the all-time high right now. And this was corrective on a wave 2. And this was the start of a third wave.
Its relative strength is very weak too. The RSI is under 50 on like the 5-year and the 1 year.
Yeah.
So you got an inherently weak market, and the 5 and 10-day averages are trying to cross and stuff. So whatever they were doing,
That one, but here's the magic line.
people do think it's an undervalued sector, biotech, but in this environment with the withdrawing of liquidity from the system, you know, some of these are the ones that get nailed the most, right?
True. And I will say between Monday and Tuesday, it plunged through the 200 period moving average on the hourly chart, and then just sank to the lows that we're seeing.
Yeah.
But here, see that because that 200 period moving average is as flat as a pancake on the weekly.
Yeah.
This is going to be support coming down, but if it breaks it, it should be resistance coming back up because it's so flat. Now, these are starting to line up. So again, on a weekly chart, if these moving averages, particularly the 20, which is the blue, and the 50, which is this kind of saddle brown color, if they break that 200, do not be long.
Yeah, this is the one where you might want to get a momentum before you get in, like a close above 50 and get some other people besides yourself who's bullish on it.
There you go. Yeah, that's also a wise choice. Yeah,
you don't want to be, you might want to be a lone wolf, but you don't want to be a lone bull. Yeah.
Right.
Let's jump over to Fortnite, because everyone is loving this one because FTNT, I think, is Fortnite. Fortinet. And yeah, because of cybersecurity, they're thinking this thing is fantastic. And a guy was on TV talking all about it, and it seemed like a good story.
I would say, according to the earnings, that it's overvalued.
Okay.
I mean, that would just be me.
Yeah.
I mean,
a good line in the sand would be around 324 right now, right?
Well, or even actually a little bit lower, but yeah, I see it because it's all kind of gathered up right there.
Yeah.
And this is
and then but I mean, and then the RSI is right at 52. So it's crunch time on this thing. You know, thing starts breaking above 350, you're probably in great shape. And if it breaks under 324, you might want to get a raincoat.
Look on the daily. Look at the stochastic momentum. Boom.
So that indicates like a little bit near a low, huh?
Yes, but it's also momentum, and the momentum actually overall has been down.
Right.
So, I mean, stochastic wise, I think it is also kind of maybe getting a little oversold. It's because it's, you know, it's kind of gone from 352 down to 325. So it's, you know, 25 bucks. It's not even that much for our stock price.
And you're looking more probably at 318, 320 as a better support.
Yes.
Yeah, I'm with you there.
I am. And if it can hold it, I'd be looking for that.
Yeah.
Bingo.
I'd rather see it at above 350 and then ride the milk train.
Okay.
You know, because when you're buying things, you're buying it because you want them to go up. You know, if it can't go to 350, you know, it's never going to go to those higher numbers. Now, there's a good room between here and 350, you know, but
buy the breakout.
Yeah.
Right.
Because I think people in this kind of stock would rather get into a bigger run than $10, unless you're just short-term gambling in it, you know?
Yes, or day trading.
Yeah.
Well, this is where it's come from. So we can't, it's come from nothing to really something. And it's had a major explosion since October of 20. Major upward explosion. So, yeah. It'll be interesting.
Well,
to
it's
see.
run. Yeah, like I say, it's in a great industry, cybersecurity, and they say it's very highly valued. But they also think that it is also the Cadillac, or one of the Cadillacs in the business, that is not going away,
Right.
because of ransom stuff
Sure.
and things like that.
Sure.
The gold miners, we're back to that gold. I guess gold's in the news today because a lot of picks here.
UG?
Yep, GDX.
GDX.
Again, it's going to look a lot
Now,
like
this is the
Newmont, because
interesting
Newmont is a
one.
big part of this thing.
Sure. And I have to tell you, it's like, before you were to invest, gold miners are, yes, it's not a bad investment. But I think that you need to look at each one of the members of this ETF, because everybody, a lot of these, the gold producers have a different evaluation of what it costs them to get it out of the ground and refined and to market. And sometimes that's, I think Newmont is way low, which is adding to why they can have such a high price. But if you're getting some of these other companies where it's costing them $1,250 an ounce, or $1,300 an ounce, or $1,400 an ounce, and I've seen it as high as 16.
But in this particular case, two of the stocks, Newmont and Barrick, represent about 30% of the index.
And that's why it's sitting up here.
thing.
Yeah, that helps a great deal, because both of those have been mining for more years than we've been around. And that
Right,
helps a
right.
great deal. But I think
And then the other ones are also big ones, like Franco-Americans, about 10%.
right. The daily, it's still got room, but let me go up to the weekly. Let's just take a look. There's your all-time, I'm going to say all-time high. See, this is great. There's the pandemic low. There's the all-time high thus far. We've corrected, and now we're going back up. If I had to make a call on this, I would say it's going to go up to a new high before it sinks back below the 50 and the 200.
It looks like it might take a run at that 45 number from a couple of years ago.
That's what I'm saying.
Yeah.
That it goes to a new high.
Yeah. So that's from 2020. It hit about $45. So
yeah.
Yeah. And it
Almost
did get above
46.
this high here, which, although this is a neighborhood, where you have to keep an eye on it, because last time it was up at 40. It
Yeah,
had
it's-
a scenario
It
of
runs
strength.
into a little brick wall here, but I think if we keep it in context, first leg of the correction, that's the bounce of the correction. Here's the bounce of the correction.
I tell you something
down
else, on a 5-year graph, I've got the RSI that I look at 59, and that 60 number plus
It's
or
a
minus,
stochastic.
yeah, on the RSI, when it goes up to 60 and it can get through 60, sometimes you really get a parabolic move. If it goes up to 60 and it can't get through 60, sometimes that's the high of the move. So I like you were saying, and we were saying, gold is at a very much of a crossroads here, where it could either go parabolic on the upside, or it could
Why?
catch a lot of people holding the bag if if they change the tune on it. And right now it does look like the path of least resistance is still up.
Yes, I agree. I
Yeah.
do agree with
But
that.
on this particular one, again, if you want to keep it on some kind of a short leash, you certainly would like to keep it above $39.
Yes. So, I mean, if you were willing to step in here and you wanted to start buying it, yeah, you want to keep it on a short leash. Yeah, I agree.
Yeah. Because again, if the news changes, you're not going to be the only one trying to get out.
Right.
These things have gone up quite a bit lately. So, there'll be more than a couple sellers if they hit the news. You know what I mean?
Yes, I do.
So, well, the next one is another cybersecurity deal, Bug. So it's pretty much the ETF, and I'm sure it's got plenty of Fortinet in there.
If you wanted to participate in cybersecurity, I like this ETF. There is the low. That is the pandemic low. Beautiful move too. Now, supposedly on Monday, they had an island reversal. That it's not really showing here. There it is, right? No, where is this? I have to figure this one out. The date is Monday. Why is that not showing on this chart? That's here.
Well, they did have a gap there on 411, but then it got filled today when it came back down.
Okay. Okay. So yeah, that's why. Okay. Got it. Because I see it on my hourly chart, which is on a different computer.
Yeah.
So yeah, that makes sense. That's a good move. And actually not only that, but then it gapped up again today.
Yeah, I got a lot of reasons why 31 area, you know,
Yes.
and 30, 31. I mean, you don't want this thing with a 2 handle.
No.
That's not that far away, you know.
No, I think you
Buck
got
and a half.
the weekly 20 is at 30. If I drop it back down to the daily, yeah, you've got the 50 moving average, and then the 200 is right at 30. So yes, I'm in total agreement with you. You don't want to see it below.
No, and like I say, I'm from the school of try it, but you know, make sure you know where the back door is if you have to get out of the building. You know?
But I have to tell you, that's not a bad trade. If you
No.
were thinking you might want to do this, your risk is $1.50.
Yeah. And you're going into an industry that obviously is, you know, with all the stuff going on with Russia, et cetera. I mean, you know,
Right,
this is not an industry that's going out of business. This is a business that's going to be growing and growing and growing.
right. So,
And here with Bug, you get a whole bunch of them rather than just the one, right?
but would you agree then in terms of investing in a stock, or in this case, an ETF, where your risk of the trade is $1.34?
Yeah. Oh, or
So
you
that's
know,
if
there's
you got
another
in here.
there's
Excuse
another
me,
one
that's
out
if
there.
you-
There's another one called CIBR that people use as well. So, you know, 6 of one, half a dozen of another.
Right. But I like it as a trade long. Now, this just followed the market today. That's all that did. We went up, then we sold off. So if that's the case and it continues to follow the market, then I would be expecting a continued downside to this move, and that it would break likely here.
Why don't you just real quick put up WCLD, which is cloud computing? Because, you know, sometimes these people think that cybersecurity and cloud computing are the cat's meows of the future here. Not nearly the good trend of the other one, though.
No, you're right. You're right.
But an interesting business to keep an eye on. Because any business that eliminates employees probably is popular with business, right?
Yeah, could be. But this one, yeah, I mean, it's a tough call because here it failed to take out that high. So I'm not really excited that, okay, this is a major sell-off, but I think that it's because it didn't take out the new high that the correction may be continuing.
Yeah.
So I think if you wanted to get in, it's okay to get in, but you got to pay attention to that 3750 level.
Yeah. All right, let's look at E plus, PLUS.
CLUS?
No, PLUS, like plus minus.
Whoops, I'll get there. PLUS. E plus. Don't touch it. I don't like this one at all. That's a major top. And it came on earnings. And there was the reaction. And they drove it all the way lower. And then it does what I can count as best as 3 waves up. This is another one, Jim, that I'm going to do it as you said. I want to see it above 58 before I buy it.
Yeah, I mean, if you can do that, then obviously you're in great shape. There is an uptrend that has been developing in the last month, but it's not exactly on the strongest legs of all time.
No, and here's the kicker. The markets have done the exact same move.
Yeah.
And
you know, if I had a gun to my head and I was trading it, I would definitely want it to stay above $54.
Even a tighter stop. I like it.
Yeah. Yeah, because like I said, I have some moving averages converging around there. RSI is at 58 and pointing up. So if it goes through 60, you know, and this thing pops above 57, you're going to be on the bicycle again.
Yeah.
And this is probably one of those exciting companies that, you know, can come up with news reports that might shake the world. You know what I mean?
They could, yeah.
Because obviously anything that's gone from 40 to 70 back down to 42 back up to 56 obviously has a lot of news hitting it from time to time, right?
Yeah. Does it have options? Do you know?
Well, at that price, I'm sure it does. Yeah.
Yeah, it does.
Let's
It's
hit
another way to play it.
Yeah. Let's see if we can go through
Okay.
yeah, let's go through a Ford. Obviously that was going great up in the 22, 25 area. Then
Now we're
it got
sinking.
nailed because I guess they can't get the cars made or something.
Yes, there's a chip shortage, which is affecting them all. Where they are doing extremely well are in electric, but I think where they're going to get caught up is that, they're not going to be able to provide that cheap financing to come in and buy from them, because Ford Credit's going to have to jack up the rates along with everybody because the cheap money is gone to them.
Yeah.
So I think that all has a play. Ford as a company, I have absolutely no problem with Ford. I have no problem with Ford at 10. I have no problem with Ford at 25.
Yeah.
But again, it's cyclical. So you kind of have to, your timing is going to have to be very, very important to you as to where you want to get in. Now, I think that this was not a bad move, but again, kind of like the market, does a little bit of recovery and then it drops.
That high looks like the Space Needle from Seattle a little bit.
It does a little bit, doesn't it?
Yeah. But my longer term averages for those who are interested come in around 1380. So it'll be interesting if it does go down any further, if it can hold that area. And if it holds that area and then gets back above 16 and 17, then you might be ready to go again.
Yeah. You got the 200 period moving average on the weekly, very flat. That should be 12, should be strong support. So that's going to go, that goes right in hand in hand with what you just said.
Again, it is consumer discretionary to buy on some of these stuffs. And if they are withdrawing liquidity, again, this is one of the reasons why some of these things also, are fading, because people are starting to discount the concept of a slowdown.
Right.
Not a recession, but, just a slowdown.
Right.
And car sales have stunk, I guess, in the first quarter, haven't they?
They did.
Yeah.
They did.
Well, here's one that everybody loves, but apparently the people who do valuation studies don't love, and that's Nvidia. Obviously a great company, has all kind of great products. I mean, I don't think you can get one negative word about the company, but you can if you talk to the guys who are evaluating companies, because obviously they're crunching the PE ratio. And that's one of the things I just want to bring this up real quick and then you take over. We got earnings coming up, and a lot of earnings may be better than you think, but there's a denominator and a numerator. And the numerator might be the great earnings, but the denominator is the valuation on that number. And if they crunch the valuation, even if you have good earnings, you could still see negative price reaction, because again, they're just not going to pay the same amount for the same dollar of earnings as they did in 21 because of the withdrawal of liquidity.
There you go.
Because the Fed is trying to reprice the economy for a tighter monetary situation.
Right.
And they'd love it to happen orderly.
Right. Now, I'm going to remind you, you and I have talked about this stock, and that's why that Fibonacci is on there. Because I had discussed at the time, there was a wave 2, and here was wave 3, and it was due and needed a fourth wave pullback. Now I'm going to drop this back down so you can see where the 382 and the 50%. Let's go back down to that daily. Look where it is and holding.
Yeah. This is a very key area.
Level.
Yeah, very key area.
Right there at 214. And you and I drew this months ago, Jim, months ago. And so you can use that. And if it breaks solidly, I'm not talking like just kind of goes and gets recovered, goes and gets recovered. It's got to break and have follow through. Then it's likely it's going to head down to here. Now, and that's the second most common for a fourth wave. And then this would be the third, and that would be all the way down at 132. I don't necessarily have that in my picture, because if it starts heading for this, you just don't want to be in.
No, because then a 130, 150 number could, a 150 number could come out in there.
Right. But I do feel as you do, I think NVIDIA is strong. It has product. It's, the chips that it provides are very unique and very important to a lot of industry. And so I think that they have a place.
Yeah.
And that they
It
have
would
a
be one to
product.
buy on a big washout and then put it away long
Yes.
term.
Yes. Agreed.
Yeah.
Because the thing is, it's like, even though we're due for this a correction or sell-off, or however you want to term it, I think the bottom line is, folks, you got to remember, it doesn't mean that Apple, Nvidia, Ford, they're bad companies. It just means we all, companies, corporate, everybody, we're adjusting to what's happening money-wise. What's
Right.
happening to interest rates, what's happening, outside of what gives us everything here in these pictures. So NVIDIA is still going to be able to produce the chips. They're still going to be in demand. So yeah, that is one that I would look at. You're absolutely
Now
right.
we got two left, but we're going to pick the last one, because on silver, just consider silver the brother or sister of gold, and where gold goes, pretty much silver will follow, I think.
Yes.
So anyway, that's it. We've talked enough about the metals because, again, they kind of work in tandem. But this next one is lithium. And, of course, it's supposed to go in all the batteries, and it's supposed to have demand going crazy, and it's supposed to be a fantastic thing. And there was just a guy who runs a company up in Canada.
Yeah. What's the symbol?
Sprout or something. He was on TV.
Oh, he's a good
LAC,
guy.
like the LA Clippers, LAC.
LAC.
And again, it does look like there's a huge future in this thing.
Let it drop down to 26.
Yeah, I mean,
Maybe not, but it should.
Yeah, the RSI is now breaking under 50, and so that's not the kind of news you want to see.
No,
And
but
then,
I think it's coming into a bottom.
Yeah, well, let's hope so.
But isn't it something? It's like, how much does Russia produce lithium wise? Ukraine lithium wise?
I'm not
I think that's
certain.
also disrupting the market, and that might be causing some of this little downdraft we're seeing here.
Yeah.
I know both of those countries are. I know China produces; they all produce, but I think that it is a larger export for the Ukraine.
Yeah.
So the disruption in the market might be causing this, but the necessity for the product, the necessity for lithium, is remaining strong because Tesla, all of the electric car makers. That's what we're going on. So yeah. That's there.
And I have a couple of averages that are crossing right now. So it's going to be very interesting because they're both crossing right around the 29 to 29.75 area. So I think if you start seeing prints in the 28 and 27, or if you saw it at 30 or 31, it might give you a better direction of what's going to be happening here, because maybe just a little bit more correction if it can get going. But I mean, this thing would be a better looking thing at 31 than it is right now.
All right. I am going to take 30 seconds, Jim, because I want to show you.
Okay. Yeah, sure.
This, I'm going back to the one you didn't want to talk about. I want to.
Well, I mean, like I say, they're going to go the same direction. If gold breaks out, this thing's following. You know what I mean?
Look at this chart, though.
Yeah. No,
there is the Hunt Brothers. The Hunt Brothers catch 1980, folks. That's 1980, and here we have it trying to get to that new high, failed. Came all the way back down. This thing is so primed. I feel that that silver, and I'm taking it by itself. Granted, it's totally related to gold, and they move together.
Yeah.
But that's what I'm looking for. 57 to 58. I am looking for new highs. And look at those fibs going up. What if the same basis, folks? If there's going to be a short squeeze, I mean, okay, all you need to look is go check out what the open interest is in SLV and GLD, and then see how much they actually have to provide all those physical positions in silver and in gold, should they be called. We're in trouble.
Yeah.
They're in trouble.
And Pan America Silver, PAAS, has been doing a great job, and another smaller one, Majestic AG, has also been doing a pretty good job. So there's been a couple of silver stocks there, if you don't want to go with the ETF, that have been gaining momentum, and AG and PAAS are two of them. So you can keep an eye on those. keep an eye on those as well.
Both gold and silver are in a cycle fifth wave. And if you've studied Elliott at all, in a fifth wave, so I know I got little time, and please forgive me, David, but this one's important. In a commodity and a precious metal, it is the fifth wave that's going to be the longest and the strongest, and you're going to get that parabolic move. We're in that fifth wave, and we've just entered into the third wave of that fifth wave.
So
This
it's a
thing
very
could-
powerful formation.
It could, yes. Thank you.
Yeah.
I'm done.
All right. Well, how are people going to get a hold of you, Michael? And your information, I guess, is on the screen or will be.
Hopefully David will slip it in there. Please send me an email, Michael at mjf1partners.com. That's my personal holding company is MJF1 Partners. But then on YouTube, again, Traders Helping Traders. Be careful. There is someone who hacked our name. So when you go to Traders Helping Traders, look for my name. And there you will find all of my big picture updates on gold and silver, on SPX, SPX and NDX, along with the futures, and then also on interest rates. And what I've tried to do is give a lot of the background of how all of these individual markets are tied to one another. And that's why they're acting so bizarre and wild.
So that's good. All right. So there's you got the email to reach Michael, and that'd be perfect. For Option Professor, just go to optionprofessor.com. We have PDF reports that I put together that are involved hedging, downside risk, and upside surprises, because we've seen some of those as well. So the PDF report covers both, as well as international markets that are emerging quite a bit right now, and also income strategies for a rising interest rate environment. So hedging and a few other different things, optionprofessor.com. Put your email in there and then we'll be ready to roll. David, I'm coming back to you. Michael, thanks a lot. I think we got a lot of information today. Thanks for being here.
You're welcome. Thank you.
All right. Yeah. Thanks, guys. Ton of good info today. So, Michael, thank you for being back with us.
You're welcome.
And just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube or your favorite podcast app, or you can just go to TimingResearch.com to get access to this recording as soon as I can get it posted, as well as any of the past shows and events. And so I just want to thank my guests again for today, Michael Filighera of TradersHelpingTraders.com and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thanks, David.